RAM Rating Services Berhad says it expects the government to miss its 2016 fiscal deficit target of 3.1% of GDP due to lower than expected revenues this year. Specifically, it expects the government to miss the target by 0.2 percentage points. However, RAM says this is a conservative estimate as oil prices are now higher than the government's assumption of $30 to $35 a barrel, and that it has the flexibility to tap into Petronas's distributable profits in excess of 350 billion ringgit. For 2017, RAM says the expenditure could potentially increase as the march to general elections continues and potential global headwinds. As such, the government would likely revise its medium-term fiscal deficit target to 2.7% of GDP. And in order to achieve its long-term fiscal balance by 2020, the government may explore other revenue sources such as taxes on investments and dividends. PM Dato Sri Najib says the government has invested more than 70 billion ringgit in the land public transport industry. He says that initiatives such as rail development have acted as catalysts for growth in the modal share of land public transport, which now stands at 21%. Citing SPAT's survey, Najib notes that customer satisfaction towards land public transport has increased from 48% in 2010 to 74% last year, and that land public transport modal share has increased from 10% in 2009 to 20% last year. By 2030, he is confident that modal share will reach 40%. Najib says the government is currently conducting studies on the Mass Rapid Transit 3 or Circle Line to improve mobility. Malaysia Packaging Industry Berhad's or MayPak's takeover offer by Japan-based Taisei Lamick Co. Limited may be called off after its independent advisor says the deal is unfair. Advisor Mercury Securities Sdn Berhad has urged MayPak shareholders to reject the offer, as the price is a huge discount of 63% to MayPak's estimated revalued net asset value per share, which Mercury says comes in at RM1.76 a share. Taisei Lamick had earlier offered to buy over MayPak at 65 cents a share after its planned acquisition of a controlling 54.95% stake became unconditional. To be fair, the offer price was higher than the closing price of MayPak shares over the past 10 years and therefore was deemed reasonable as it gives an opportunity to shareholders to exit. Syarikat Takaful Malaysia Berhad saw a 30% increase in its net profit on higher sales from its Takaful businesses as well as Wakalah fee income. Earnings came in at about 45 million ringgit, revenue rose 10% to about 427 million ringgit. Takaful Malaysia says its family Takaful business saw gross earned contributions improve from about 252 million ringgit to 302 million. That's driven by higher sales from mortgage-related products. Meanwhile, General Takaful's figures rose by about 10 million ringgit to 121.7 million ringgit. The Takaful operator says it will continue to reward its customers with 15% cashback for General Takaful products. It also aims to set a strong foothold in the local insurance and Takaful arena. Furniture maker Pohua Resources Holdings Berhad has set up a wholly owned unit after acquiring a warehouse-cum-office building in Victoria, Australia. The unit, Pohua Australia, will have an initial paid-up capital of 100,000 Aussie dollars. Pohua Australia will also act as an investment holding company for a warehouse purchase last month for 4.25 million Aussie dollars. The purchase will be funded via a combination of equity and shareholders' advance. The Australian population is relatively small compared to Pohua's other markets, but the company believes that the affluence of Australian residents in major cities provides good opportunities for expansion.